Today, I want to talk about a proposal that's getting a lot of attention. President Trump recently floated the idea of capping credit card interest rates at 10%. On the surface, that sounds great. Credit card balances are at record highs, delinquencies are climbing, and a lot of people feel trapped by interest rates north of 20%. So the idea is simple. If rates are lower, people pay less interest and debt becomes easier to manage. But in reality, it's not that simple. First, there's the basic issue of power. A president can't just impose a nationwide rate cap on private lenders without Congress. This would require major legislation, and even then it would face heavy pushback from banks, lenders, and likely the courts. But even if it did happen, the consequences might not look the way people expect. Price controls almost always distort markets. We've seen this with rent control. It helps some people in the short term, but it usually leads to higher prices and fewer options for everyone else. The same thing would likely happen with credit cards. If banks can only charge 10%, they won't just accept lower profits. They'll tighten lending. That means fewer approvals, lower credit limits, and stricter requirements. The people who get hit hardest would be the exact people this policy is meant to help. Those with thin credit, younger borrowers, and small business owners who rely on revolving credit. Another thing most people don't realize is how credit card companies manage risk. If you haven't used a card in a year or two, they often cancel it, not as a punishment, but to reduce exposure. And right now, many lenders are already lowering limits across the board because they see economic stress building. So if a rate cap came in, you'd likely see even more aggressive cutbacks. There's also a fairness issue. Most credit card profits come from a small percentage of users who carry large balances. Meanwhile, responsible users who pay on time basically subsidize the system. A rate cap would shift that entire structure, and not necessarily in a healthy way. Which brings us to the real issue, financial literacy. Most people don't actually understand how credit cards work. Interest compounding, minimum payments, utilization ratios, these things quietly destroy wealth if you're not careful. We require licenses to drive, but anyone can get a credit card with zero education. Maybe the better solution isn't a rate cap, maybe it's better education, clear warnings, even basic competency requirements before someone gets access to high-limit revolving debt. Because credit cards aren't evil, but used incorrectly, they're one of the fastest ways to fall behind financially. And no policy can fix that part for you.